All right, good morning, everybody. Guys, for those of you interested, three divergences, everything rolled. I got in a little late on the first short, took profits all the way down, got in, got run over. Sometimes the perfect trade doesn't work. Got back in, got paid. Kind of a nice morning. Gold met. I'm done trading for the day. A lot of fun. Thank you for being patient, ladies and gentlemen. It was just a couple high probability trend trades. That's it. Um, and then weak triggers, divergences, enough of a reason for me to get out. How's everyone doing today? It's good to see you here. And guys, what's cool, and I was telling my wife, I'm in this trade. I'm like, you know what? I can't wait to show it because this is what, love it. Cav, critique it for me. Do me a favor. Critique it for me. Get me, guys. If I made a mistake, because there's stuff on here. If I made a mistake, I want you guys to point it out. Somebody annotate my chart for me. I would love that. I think that would be amazing. Guys, nice to have you here today. Always feel honored to be here and be a part of your journey. Today is Tuesday, April 9th, guys. The first thing I do each and every day is I check news. I make sure that I'm not trading into something that's kind of crazy, making sure that there's no emotional responses I need to look out for. And today there's really nothing. Where did I get in early, Kev? No, annotate the chart. Don't tell me I got in early. You draw me a circle at my correct entry. You let me know. Beat me up. Beat me up. Beat me up. I did. I had just opened charts. So I was 3 ticks late on the first one. 3 ticks late on the first one. 4 ticks late on the first one. You're absolutely right. Good eye. See, Cav knows his rules. Guys, you're going to know the rules too pretty soon because that's what we're going to talk about today. Same thing we talk about every day. Whew, allergies are real in Texas, guys. This is forexfactory.com. This will let you know when news is coming out. Guys, I don't trade the news. I don't worry about what they're saying. It doesn't bug me one bit, one way or the other. But what I do know is that when there's a red box or an orange box, that the market may go absolutely nuts. Somebody might respond to what's going on. And it's not like you or I that's responding to it, guys. It's these guys. We're a big fan. I'm a big fan. Follow the large crowd. Let the large crowd lead the way. The large crowd, guys, is a representation on your large chart of the people that create trends, the people that establish momentum, the people that really set the tone. They react to areas. They let us know when things are good and when things are bad. And I try not to be a part of the small crowd. Ron is the small crowd. Ron's that Yahoo that pushes against everything the up crowd says. Everything. And guys, news is when these guys react. So you're a pirate, Ron. So knowing when news is potentially there, guys, it creates a huge advantage for us. It keeps us out of the way. And if you asked in the room and everyone decided to be honest one day, and you said, hey, who's traded into news and gotten slaughtered? There's my hand. I've done it more than once. Not proud of it, but I have done it more than once. And then, guys, everything that we talk about every day comes from the education page. There's no secrets with Nexgen. There really isn't. Is it, Cav? I'm not even sure I've looked at NASDAQ today. I took one trade long early, and then it just got caught between areas for me. That's all right. Someone will break out eventually. Guys, there's two sections on the education page. There is the software user guide, and there's the tutorials. Your software user guide is your NinjaTrader how-to. This is for you guys that are brand new, and I know I've got some new people in here. Don't be shy, guys. I want to hear your voice. This is your NinjaTrader how-to. This is opening. This is closing. This is scaling your charts and setting up stops and targets. And oh my gosh, this is everything. Changing the view, resetting your simulator, adding symbols, rolling contracts, chart templates, market flow, Ninja Data, repair and reset. all the great things that really make NinjaTrader work. So if you ever have a question about NinjaTrader, I want you to feel free to ask in the room. But if for some reason it's 7 o'clock on a Thursday night and nobody's in any of the rooms, you can come back and take a look at this and get some answers. This also has a glossary of common terms. So you newer users, you're like, the heck is this one-to-one that he keeps talking about? This will really run you through most of what you're going to see and hear in the room. But the one that I really want you to focus on, my favorite definition in the entire glossary, is the high probability trade. Guys, this is the trade that I teach for the first hour every day. This is the trade that I beg and plead with you guys to learn before you go chasing everything. This is a trade where every indicator on every chart agrees for the trade. And it is strongest triggers. It's nothing in the way. Nothing between you and your target. And guys, this is a trade, this high probability trend trade. This is a trade that typically wins 70 to 80% of the time. This is a trade that creates an enormous amount of confidence through the memory of success. But most importantly, and I can't stress this enough, and this is my segue, is this is the trade that teaches you to be a chart reader. And if I had one hope for each and every person in this room, it would be that you become a chart reader before you try to become a day trader, that you learn to read what your indicators are telling you before you try to get in here and take trades. Because it's your chart reading that's always going to set you up for the trade. It's the chart reading that's going to allow you to know where the market is likely to continue, where it's likely to go, where it's likely to stop. And the more you focus on chart reading, the faster your chart reading becomes, the quicker you're going to be able to make decisions. Your chart reading is what's going to take you to your trade entry. Your trade entry is based off of advantages. It's a high probability trend trade initially. And guys, you're going to be able to pinpoint where the market is most likely to continue. And it's going to be pretty outstanding because it's going to allow you to reduce risk. It's going to allow you to maximize profit potential. But it's your chart reading that gets you to trade entry. And then it's those great entries that put you in a position to have management that makes sense. So we're going to keep it really, really basic today, guys. I want you posting your trades in class. I want you writing on your charts. I want you to tell me what you see. Hey, Mark, here's the picture that I just took. And this is what I saw on my large chart. And this is what I saw on my small chart. And guys, real important, show me where you get in and show me where you get out. Because sometimes you take the perfect trade and sometimes that trade doesn't work. And there might have been an opportunity for re-entry. There may have been a way for you to still get paid on that trade. And then the second thing is use your spreadsheet. Guys, this spreadsheet is freaking amazing. There's 4 tabs. The first tab is your trade tracking sheet. And all this is your trade journal. Every time you take a trade, simulator, live, I don't care, take a picture of it, annotate your chart, talk about what you saw, why you did what you did, where you got in, where you got out. And this is kind of cool. Talk about how you felt, because you'll find that you're going to get nervous when you know you're breaking your rules. And you're going to find that you move stops quickly and unnecessarily when you know that you're breaking your rules. So it's important to log how you felt each and every trade. And then when you post it in the room, you and I are going to have a conversation. That's all it is. We're going to talk about advantages. We're going to talk about entries. We're going to talk about exits. And our goal each and every time you present in the room is that you and I can find a way to do it just a little bit better. So Cav gave me feedback. Cav said, man, Mark, that's a great trade, but you're in late. And then if Cav had a microphone, Cav would also say, and Mark, check it out. If you would have gotten in at the mid band rather than down here below the triggers, you would have had less risk on this trade. You would have had the opportunity to make more money. Your large chart looks great. Your small chart looks great. But here is an extra $50 in your pocket. Here's an extra $50 less risk. Great job, Mark. I like what you did, trading with momentum, trading with the trend, and look at you collecting profits. Great. Let's just focus on our entries so that you can get paid just a little bit quicker, and you can have just a little less risk. And I'd be like, wow, thanks, Cav. Now I'm going to look for these better entries. Good morning, Miss Cindy. So when you post in the room, you open up yourself to have a private session with me. That's exactly how you should look at it too. Don't worry about the other 32 people in the room. This is our time. This is your chart. Ask me a million questions about it if you need to. Post as many as you want. Somebody asked me yesterday, hey Mark, how many pictures am I allowed to post in the room? All of them. The answer is all of them. We're going to learn the trigger line and Fibonacci rules for when it's okay to trade. And that's what we're going to do. We're going to focus on the rules. The most successful traders that I've ever met in my life have two options when it comes to entering the market. Rules met and they enter the market, or rules not met and they choose not to enter the market. Because guys, our rules are going to provide us a statistical advantage. Our rules are going to be proven to win more than they lose. And our rules are going to be patterns that are recognizable, that are repeatable. And the goal for each and every person in this room is to do the exact same thing every time, because you have a pretty solid idea what the result's going to be. And the more you deviate, the more likely there's different scenarios. So simulate, practice, make mistakes, but just post them in the room. Post them in the room and tell me what you saw, what you thought, what you were feeling, what you were hoping, what you were wishing, why you entered, why you exited, why you moved your stops. Because the annotation isn't just for me, guys. The annotation is for you. What you're going to do every morning, if you really want to be successful, is you're going to go back and look at what you did yesterday. And you're going to say to yourself, man, this worked and this didn't work. So I'm going to repeat this and I'm going to avoid that. And Mark said, stop trading in determination conditions. Stop taking what you think are momentum trades without momentum. Stop holding for home runs when the areas aren't broken, right? And you're going to take these and you're going to say, okay, now I have a plan to go into the day. Now I've got this idea of what I should be doing, what I'm looking for, and I'm not going to practice the wrong trades. We're going to simplify. Oh man, are we going to simplify? We're going to talk about a high probability trend trade. Why? Because it wins more than it loses. And the goal is to win more than you lose, guys. And the better you become at chart reading, the more opportunities there are. But until you're chart reading, doesn't it make sense to have a plan that offers you the ability to have success? You have to learn the looks so that they become easy. So I'm going to go back to your spreadsheet real quick. There are about 300 pictures of you guys using the software here. When you go through these pictures and you recognize the looks, it's like the market slows down. There's ideas on entries, on the NASDAQ, on management, patterns that repeat themselves. Not only patterns that may cause problems, but there's also patterns that are going to help you find success. Hey, Zorro. There's a whole section on understanding where the market is likely to stop, because this is where you guys tend to have the most problems as new users, hoping that those lines that everybody paid their money for break. So this fourth tab, guys, check it out, study it. If you have questions about it, ask them. The third tab is where you're going to begin to develop your trading plan. You're going to take the trades that make the most sense to you, the looks that are the easiest for you to recognize, the ones that have been proven to have advantages that win more than they lose. And you should start filling the spreadsheet with those pictures once again so that they become easy. And then finally, and this is the 101 section, guys, because we're about to go through high probability trend trades, which are only 3 rules. And this second tab is designed to make you a chart reader. The second tab is designed to make it so that you can recognize advantages in an instant. So you understand what you're up against or what's helping you in a trade. I went through and I gave you your first 10 of each section, guys. The more pictures you fill in this, the quicker you're going to get to where you want to be. There's no doubt in my mind about it. And you've got to learn the looks so that they become easy. Recognition comes through repetition. And the further you deviate from this very simple plan, guys, the more you don't take pictures. Do I analyze the picks? Absolutely. So Rob's asking, so check it out. Rob's saying this is the perfect long, right? This is the perfect trend trade. Why is it the perfect trend trade? Well, let's open it up and take a look. Because there's strong triggers, because there's no termination conditions, because you bought a pullback inside of favorable large triggers. So Ron, what you can do, or Rob, excuse me, what you can do is you could say, okay, my trigger should look like this for the perfect trade. Price shouldn't reach an area for the perfect trade. And price, I didn't jump in up here. I pulled back to support inside of favorable large triggers. So Rob, burn this one into your brain because I'm telling you, it doesn't get any better than this. This is the best look ever. This is a trade that typically wins 70 to 80% of the time. This is a trade with all that momentum typically makes the next key area. So Rob, your goal as a brand new user and everyone else in this room that's not finding the success that they want yet, your job is to make sure that if you go long, it looks like this because this is the one that wins more than it loses. And that's really all you're doing. So you go back and you study them. But if you have a question about them, drop it in the room and ask me. And then guys, we're going to use two charts for the sake of simplicity. Okay, and cool. Adriana, you got the tab. Awesome. And then Cindy, yesterday, did you start practicing taking pictures of strong triggers, weak triggers, terminations? Is it helping? This is what I want to know. Guys, if I give you something to do and you're like, man, I'm just not getting anything out of this, let me know. I'll find something else. It helps a lot because it just gets easy. So guys, two charts. Thank you for mentioning that, Cindy. I really do appreciate it. And for those of you that don't know, I've screwed up everything that you'll ever screw up. I've broken everything that you'll ever break. I've shattered every rule that you'll ever have to follow. And what you're going to realize is that the way I teach this class is to try to get you guys to not have to make as many mistakes as I made, to not have to take as long to be proficient as I took. Because guys, I fought everything. And this class is designed to get you to where you want to be a lot faster than I got there. So, oh, and that's awesome that your husband's doing it. I love that. And he's had software for a while, right? Or did you guys start at the same time? Guys, you're going to love, if you just do it, it's just got to work. You'll get out of this whatever you put into it, I promise. Large chart, guys, leads the way. Remember that large crowd I showed you? Those people that push the market, that make things happen? That's your large chart, guys. Your large chart will define direction. It'll define momentum. It'll define areas. And it's a broad stroke of a brush. It's a very slow-moving chart. Shows the overall opinion of the market. It lets you know what the people in charge want to have happen. Your first two rules are met on the large chart. And you don't even look right. You don't even go to that small chart unless your rules are met on the large chart, because the small chart is the small crowd. These are the people that fight the people in charge. These are the guys that have just enough money to give a little bit of shove when everything else says up. They make it go down just a little bit. Guys, we use that small crowd. We use that small chart to refine the broad stroke of the brush. What happens in one bar, the most current bar on the large chart, you're going to break down into 15 to 30 bars on your smaller, faster chart. It's going to allow you to reduce risk. It's going to allow you to maximize profit potential. It's going to pinpoint where the market is most likely to continue through rule number 3. So we're going to use the small chart. We're going to use the large chart. Good morning, Jess. Nice to see you. And guys, you're going to be able to keep it very, very simple. Only 3 rules on 2 charts. You will be tempted to create more rules. You will be tempted to create exceptions. You'll be tempted to deviate from this very, very simple path. I would encourage you not to initially. Really focus on learning to read your charts through the high probability trend trade and get to a point where you don't say, is that a trade? You say, are my rules met? Do I have the advantages that I need to enter the market? Because a trade is nothing more than momentum, a clear path, and an entry area. And it's these 3 things that create the high probability trend trade. And the high probability trend trade is that trade that typically wins 70 to 80% of the time. So there's only 3 rules. And the rules say, hey, guess what? This is the best of the best. And if one of those rules goes away, you're going to be a chart reader. You're going to say, well, I don't have a clear path anymore, but I do have momentum in an entry area. I'm willing to take a medium probability trade, a trade where most of my indicators agree. However, a small issue exists. And your ability to read charts will have you managing these medium probability trades. They'll put you in a position where you can begin to capitalize when things aren't perfect. So we're going to focus on these three rules. Each rule creates an advantage. Three advantages creates a high probability trend trade, a trade that typically wins 70 to 80% of the time. Rule number one on the large chart says that I must have strong triggers, and really the only way to do that is if I'm trading with the direction of the market. Your background will determine that. The most current bar on the large chart, whatever color the background is behind that bar is which way that market is going. If it's green, it's up. If it's red, it's down. And then to have strong triggers, the trigger line colors actually have to be the same as the background. So when the background is green, your small triggers, these faster moving averages, and your large triggers, the slower of the two, they must be green. They must be wide. They must be angled in the direction of the trend. And then when they open up, when the scissors open, there's space between the two, guys, the odds are favorable for the market to continue in the direction of the trend. We're going to call this odds favorable momentum. You can annotate it on your charts, OFM. Keep it simple. But when I have odds favorable momentum to the upside, this is the best of the best time to buy Fibonacci support on a smaller, faster chart. On the large chart, we're playing with one bar. It looks like a tail or a wick. On a small chart, this is going to be 15 to 30 bars, and you guys are going to be able to pinpoint exactly where the bottom of that tail is most likely to form. This becomes your entry for the highest probability trend trade. When the smalls are below the large, when everything is wide, angled in the direction of the trend, the space created between the two, once again, like scissors, opening. If scissors are open, you can cut, you can get work done. If they're closed, all you can do is take a stab at things, right? So when I have these strong triggers, the odds are favorable for the market to continue down. And when the odds are favorable for the market to continue down, ladies and gentlemen, you will be able to pinpoint exactly where the market is most likely to continue. Using that smaller, faster chart, selling Fibonacci resistance. It looks like a tail on the large chart. It's going to be a full small crowd pullback, and you'll be able to pinpoint it. So odds favorable momentum, guys. It is going to push the market in the direction of the trend. Odds favorable momentum has the potential to break key Fibonacci areas. And odds favorable momentum, God bless it, will cover a lot of the mistakes that you and I make as traders, because this is like a train going 100 miles an hour and it just takes a while to stop it. So this is your best look. Let's sell Fibonacci resistance on a smaller, faster chart. But as you grow with the software, as you begin to recognize advantages, when you become a chart reader with both triggers down, when one of the small triggers are inside of the large triggers, you're going to recognize this, that momentum is slowing. You're going to be able to say to yourself, I am losing the advantage of momentum. I can visually see it slowing, but it's still cool to take a short trade, because the reality is if all my charts agree, I can still find an opportunity to get paid. And then when both triggers are down, once both of the small triggers are inside of the large triggers, you have a weakening or a slowing of the trend, guys. And anything can happen is the term that you're going to hear in class. Short trades may still be taken, but they must be managed well. And by well, I mean aggressively. You're going to have to be a chart reader. You're going to have to look for changes on smaller, faster charts, because the reality is anything can happen is the most truthful phrase that you're going to hear. Anything can happen can ruin your day. Anything can happen can create big retracements. Anything can happen can be a reversal in the market. And when anything can happen is right there at those key Fibonacci areas, these areas are more likely to hold. They become one of those likely to stop areas. So pretty simple. I have $100 to put into the market. Am I going to put it with odds favorable momentum in a market that's likely to continue in the direction of the trend? Or am I going to bet that $100 when anything can happen? Guys, it is a crapshoot down here. This is your best chance of success as the brand new user. So when you're looking at your rules, it's okay to say, without momentum, I choose to not trade. And that's a difficult thing to do. Once you have momentum, we have to make sure that we have a clear path. We have to make sure that there's nothing in the way. Guys, once again, the large chart is giving us everything that we need on this most current bar. The background is green, so I know the market's going up, so I'm only looking for rules to be met for high probability trend trades long. My small triggers are above the large triggers. There's space between the two. My scissors have opened. I know that I have odds favorable momentum and that rule number one is met and that advantage is in place. And now I've got to make sure that there's not an area that could ruin my good time, guys. And rule number two says no termination conditions. Room to profit targets must be true. This gives me the advantage of a clear path. Guys, I love to write clear path on my charts because it reminds me that there's nothing for the large crowd to run into, nothing to make them force a decision. And termination conditions are just Fibonacci-based indicators that have the potential to stop the market. They may reverse the market. They're not obligated. They are not definitive. But there's a recipe to let you know when they're so likely to reverse the market, you lose your statistical advantage. And you're going to do that with a comparison between the T3 trigger lines and the areas. And you're going to use that comparison and you will understand if the area is likely to stop the market, if it has the potential to break, or if the area has broken. And you're going to do that with that simple comparison. You're going to do it at blue Fibonacci support, red Fibonacci resistance, yellow 1-to-1s. You're going to look for it at a cyan divergence low line or a magenta divergence high line. And those are going to be the areas on the large chart where the large crowd is making decisions, guys. That's the best way to think about it. If the large crowd makes the market go up, if the large crowd gives the market momentum, well, then the large crowd is also going to react to these very key areas. This is where buyers buy and sellers sell, where profits are taken, trades are entered and exited. And guys, you know about them long before you ever get to them. So the recipe for understanding when these areas may stop the market is that price first reaches the area. Decisions are made at the area, so price has to arrive. Once price reaches the area, in this case Fibonacci support, all you have to do is check the trigger lines. And if they're not below support, don't take any more trend trade short on the small charts, guys. Don't go short into an area that may stop the market because you no longer have the advantage of a clear path. You guys give me a Y in the room, and let's pull up a live chart real quick and see if we can't recognize this. Price reaches Fibonacci resistance, the triggers remain below. Guys, that was your reversal point. Price reached yellow 1-to-1s, triggers remained above. That's where it bounced. Right off of support, divergence low line. This started the entire up move from a termination condition. And that divergence high line, when price reached it and the triggers remained below, stopped it and dropped it. Pretty outstanding, right? Guys, you know about these areas long before you ever get to them. What I want you to do is embrace the idea that if price reaches Fibonacci resistance, no matter how strong the triggers are, I'm not going long into that area. Can you guys give me a Y in the room if you're with me here? Price reaches, no triggers, no trade. And it's frustrating because sometimes you're going to hit these areas and then there's going to be one right behind it and you're going to have to do absolutely nothing. 90% of your day, ladies and gentlemen, will be waiting for advantages. And if you just wait that 90%, the 10% becomes pretty effortless. Well, when is an area broken, guys? If I can't trade into an area because the price reached it and the triggers haven't broken it, when both my small triggers and my large triggers get below the area in question, the area is considered broken. The path is now clear until I reach that next key area. And I've got a picture that gives the two scenarios, and then I'm going to introduce you to a third scenario as well, because we know through a simple, I do, Jess, I'm a huge fan of getting paid at lines. I am such a believer in the potential of these areas to stop the market that I love to get paid at these lines, because I'm not going to lie, man, my goal as a day trader is to get paid. My goal is to not give it back. My goal is to fill my account, don't drain my account through hope. So if price reaches an area and the triggers are below it, Jazz, absolutely, cha-ching, I'm out. I'll wait for the next great trade. Small and large break through the area with odds favorable momentum. Check it out, Jess. There's the next great trade. I can get paid at the red line and then just get right back in when it's blue. And this is one of the cool things about what we do, guys, is we don't have to hit home runs every time we take a trade. There's opportunities for us to make money, sometimes even in the same range. So no triggers, no trade. Both triggers, the path is clear until I hit the next area. And then there's a third scenario, guys, and this is your medium probability scenario. This is what we call a 50-50 trade. 50% of your triggers make it above, smash through the area in question. But the large triggers are lagging behind, so we know that it's not broken. We know that it's not a clear path. But with odds favorable momentum, and guys, this is the key to it, is you must have odds favorable momentum. This area now has the potential to break. But I want to show you something. There's your clear path. Your clear path is gone on the 50-50 trade, which means that it's imperative that you insist, demand, if you will, on momentum. Don't give it up, because momentum is what has the potential to break areas. And it's even more important that you don't give up a great entry area, because guys, this is a medium probability trade. This isn't a trade that wins 70 to 80% of the time. This is a trade that has problems. But this is a trade that I'm going to give you a very solid plan to learn how to take it. But I'm also going to warn you right now that this is the most lost trade in new users' portfolios, because they do sacrifice momentum or they don't take the best entry. So I'm going to teach you how to take it. But first, we're going to keep moving along, guys. We're going to really solidify termination conditions and the idea that it's okay to wait for the rules to be met, because price reached Fibonacci resistance and the trigger lines remained below, and each and every person in this room had the opportunity to not lose money into that area. And then it pushes all the way back to support and right by that mid-band. And all the triggers remained above, and once again, guys, what an outstanding opportunity for you to not get caught trading into an area that may stop the market, and it bounces. And it would have killed you. It would have taken you out, right? I want you to see this. These large triggers are a full bar away when price reaches Fibonacci support, or if price reaches a mid-band, that lets us know it's a termination condition. Ladies and gentlemen, this is what we call the gap theory. When price accelerates away from those large triggers and they just can't follow it, that moving average can't keep up, price typically closes the gap back to those triggers. And then Ron, you've got the greatest, no, that's not gap theory. Never mind, bad timing. This gap theory gives you the opportunity to say no long trades, let me be patient, let me wait. And then price reaches Fibonacci resistance. And all the triggers remain below, and we can't go long again. And we're really embracing that idea that 90% of our day is reading indicators. Price also reaches this divergence high line, this magenta line. And I want to go through divergence real quick. If you see a pivot with a pink line from a high or a cyan line from the low, this means that there was a loss of momentum, guys. The formation of this line is not a termination condition, because price didn't reach it. Price actually creates it, and we know about it down here on the third bar. But if price reaches a divergence high and the triggers remain below, now it's a termination. And if price trades above it and then back below it, guys, then it's a pivot stop out. And a pivot stop out is very much a termination condition. And a pivot stop out becomes even more powerful when Fibonacci resistance or support are true, when those are behaving as termination conditions as well. So no longs, no shorts, no longs, but wait a minute, off this termination, suddenly I have odds favorable momentum. And I haven't reached Fibonacci support yet, and there's one of those tails, guys. And that's your highest probability trend trade. A high probability trend trade that happens after a termination condition reverses the market. This is the one that typically wins 70 to 80% of the time. This is the trade that you're going to train yourself to never miss. This is the trade that has every advantage on every chart. And if a termination condition reverses the market, guys, that's a strong top. And a strong top is the precursor to the highest probability trend trade you can take. And this is the most fun picture that I show all day long. It's fun for me. because this reminds me that no matter how much I wish the market would do what I want it to do, I'm not in control. And when price reaches those one-to-ones and the triggers remain below, I have to sit on my hands and do nothing because my path is no longer clear. And then when price pushes up to resistance and the triggers remain below, I can't go long. And then it pushes back down and I don't have momentum, so there's no trade, and I'm still into a termination, and the triggers don't match, and I'm still into a termination, and that mid band is a full bar away from the large triggers, and I don't have a clear path, and son of a gun. This is your 90%, guys. This is you sitting on your hands for 45 minutes. 45 minutes doing absolutely nothing. This is where you have a choice. You can lose zero because it costs nothing to not be in a trade. Or this is where I see a lot of people down about $750. They take 3 or 4 trades. They trade their opinion 3 or 4 times, and they get dejected, and they get frustrated, and they get angry because their opinions aren't working out the way they wish they would. But what's cool is eventually this termination that reverses the market gets all my triggers above resistance, and now I have a clear path. And it gives me the momentum that I need, and suddenly my first 2 rules are met, and all I have to do is buy Fibonacci support on a smaller, faster chart. And guys, this is about a $320 run up to resistance. This is the best of the best, guys. This is your 10%. Are there more opportunities? Of course there are. But as the brand new user, as soon as you understand, as soon as you can look at your chart and say to yourself, I have the advantage of momentum, or I don't have the advantage of momentum. My path is clear, my path is not. And then you'll know whether or not to look for entries. And guys, this is the 10%. This is enough to build a career on. This is enough to make more money than you could ever spend. But people, for whatever reason, fight it, and I don't know why. Is everybody cool with termination conditions? We kind of ran through it here. Price just reached one-to-ones, and the trigger lines are below. Weak triggers, there's your reversal up to the top side. Right into it, right? All these problems can be found on the large chart. All these advantages can be found on the large chart, guys. There's one termination condition that's going to happen on a small chart, and it uses the idea of divergence. There are times when the large chart will turn from absolutely nowhere, even with odds favorable momentum. Remember that the large chart is a broad stroke of a brush. It's a slow moving train. On a smaller, faster chart, guys, you can see 3 divergences in the same price range, and it may terminate the trend. Because 1 bar on the large chart is 15 to 30 bars on the small chart, you'll see this loss of momentum 3 times. Cyan lines print off of a pivot, it may reverse the market. 3 times. Magenta lines print off of a pivot in the same price range, it may reverse the market. There's that word may again. This look becomes more powerful when your small triggers go from odds favorable to anything can happen. The same lesson, the same chart read that you took from the large chart makes it more powerful. And then if your third divergence is higher than the previous from a low or lower than the previous from a high, creates a head and shoulders pattern. Guys, that adds fuel to the fire. But here's the deal. 3 of them is an actual termination condition. 3 divergences in the same price range means that I don't have a clear path, that rule number 2 isn't met, that it's no longer a high probability trend trade. You're going to see this look at a low or this look at a high, and it's going to help you identify on the larger chart when things may be changing, when maybe those weak triggers want to push it up, or maybe it's not going to make that next key area. And these 3 divergences, guys, if you're not in a trade and they print, it's enough to keep you out because rule number 2 isn't met. And this is the only termination condition that I give any credit on a small chart. On the large chart, I'm using lines to determine where problems are. And on the small chart, we're going to use lines for entry, but only after the large chart says odds favorable momentum. Does everybody see on the most current bar? The market is going up, direction is defined. The momentum is strong. Rule number 1 is met. We have not reached Fibonacci resistance, and we have cleared the previous resistance. The path is clear, guys. The large chart says, let's go to the small chart. Let's refine the broad stroke of a brush. Let's use a limit order to buy or sell areas inside of favorable large triggers. We are going to be so good at what we do, guys, that when the market is going up and the odds are favorable with the momentum and the path is clear, you're going to be able to buy Fibonacci support while the market retraces down against the overall trend. It takes a while to build that confidence. It's a little scary for the brand new user, but you will be able to buy low at support to go with the momentum, to go with the clear path. And when everything is going down, you're literally going to sell Fibonacci resistance on the way up. And you're going to do it at an area of resistance inside of favorable large triggers. And guys, we can do this through the 2-chart process. What happens in one bar on the large chart is all of these bars, the black box has just been transposed over. So the bottom of the most current bar, when I have odds favorable, when I don't have a termination condition, will become the beginning of the pullback, the small retracement, counter to the underlying trend. And the top of the bar, that tail, becomes the pullback to resistance inside of favorable large triggers. And through this refinement chart, guys, we can reduce risk. We can maximize profit potential. And my hope for you guys in your first 30 days is that you just focus on finding what we're going to call the window of opportunity. So let's go through it to the short side real quick. Imperative. The large chart leads the way. The large chart says down. The large chart says momentum. The large chart says the path is clear. So I'm going to wait for the small crowd to do their thing. You guys remember when we talked about when the large crowd establishes everything we need, the small crowd fights. The small crowd fight begins with a reversal bar. The reversal bar is not your entry for a high probability trend trade. It is the beginning of a pullback. So rule number 3 says that I'm going to buy or sell a pullback at an area inside of favorable large triggers. So the first thing I'm going to do is I'm going to find my trigger lines, large and synthetic. And I'm going to tell you guys right now, the tighter they are, one on top of the other, the smaller your window becomes, the least amount of risk that you're going to have, the higher the chance of success becomes. Because the trigger lines are moving averages. This is your correction point. This green box represents where price will probably correct to. We don't sell the impact on the trigger lines because the correction point is huge. So we're going to be able to refine it by finding areas inside of favorable large triggers. Fibs, midbands, yellow 1-to-1s, yellow 1-to-1s, not pink 1-to-1s. I had an awesome question the other day asking about those pink 1-to-1s. Guys, the pink 1-to-1s on a small chart are small swing 1-to-1s. There's not enough behind them to make me believe that they're going to stop the market. If they coincide with resistance or yellow 1-to-1s, I love it. But for the sake of the high probability trend trade, resistance, magenta midband, yellow 1-to-1s inside of favorable large triggers. So you're going to be able to create a window of opportunity that extends from the lowest point of resistance, closest to price, to the highest point of resistance, furthest from price. And this becomes the point where the market is most likely to continue. And I want you to see how it goes from the triggers and refines down to this simple little area. This is where I anticipate the market to bounce. This is where I am going to activate a limit order just below the area of resistance, the lowest point of resistance. And if that small crowd can push me back to it, I'm now in a short trade. And I'm in a short trade with the advantage of momentum, with the advantage of a clear path, and now having entered where the market is most likely to continue. I've used my chart reading to say that this is in fact a market that's likely to continue in the direction of the trend, and there's absolutely nothing in the way. Let me grab one of those fluctuations. Let me get into a trade that typically wins 70 to 80% of the time. And guys, if you focus on your high probability trend trade entries, if you give yourself 20 days to learn how to recognize where the market is most likely to continue, you'll have less risk on your trades. You'll have a bigger run to your potential profits. You'll understand with clarity where the market is likely to continue, and then through study and practice and simulation, you're going to learn to trust it to where you will literally buy that market as it's pulling down to Fibonacci support inside of favorable large triggers, or you will sell that market as it's pulling up into Fibonacci resistance inside of favorable large triggers. And guys, the cool thing is it's a two-part process, right? The large chart says up. The large chart has odds favorable momentum. The large chart has a clear path. I'm not buying a tail because by the time this tail forms, this market is gone. So I wait for the reversal bar. I find my triggers. I identify the areas within, and I take my trade as it pulls back to support inside of favorable large triggers. Guys, from the top of the bar, I got about $150 worth of profit potential. From the bottom of the bar, I've got about $350 worth of profit potential. My risk is virtually nothing because I waited for the area inside of favorable large triggers. I know where the market is likely to continue, so I'm going to put a stop where it shouldn't go. I'm going to put a stop above that window of opportunity, 4 or 5 ticks for a short trade. I'm going to put it 4 or 5 ticks below the window of opportunity for a long trade. And once I get a reversal bar in the direction of the trade, I'm going to reduce my risk even further. Guys, by identifying where the market is most likely to continue, you're going to be able to increase your profit potential. You're going to be able to reduce your risk. You're going to be able to, even on the ones that don't work, and guys, 2 to 3 out of every 10 aren't going to work, take smaller losses and then wait for the next opportunity rather than hoping and losing large amounts of money. So this is our first hour, guys. Every hour we talk about the high probability trend trade. I want to show you, I don't just teach it. I trade it. I was a little late, but with odds favorable and everything down, coming from a termination that reversed the market, that's a $300 trade. Pretty easy. And then with odds favorable and a clear path, I take the entry on the way up right at resistance inside of favorable large triggers. My stop is where the market shouldn't go. And I'm going to tell you guys right now, you will take losers. This one gave me a reversal bar and I took a small loss. But I re-entered the market because my rules were still met. And I'll be damned, I was able to get paid, guys. And that was my goal met for the day off of the high probability trend trade. And sometimes you may have to go twice. But what happens is you have to develop a little bit of trust. You have to develop some recognition. You have to practice it so that it becomes easy. There's your entry sequence, long and short. And now I'm going to give you guys the KISS plan. And the KISS plan is the most frustrating thing for new users because it keeps you focused on the best of the best. You want to catch all the moves. You believe all the moves are your moves. All the money should be your money, guys, and it's because we're all human and we're very egotistical. But if you walk into the bank and you say to the bank teller, give me all the money, guys, you're going to get hogtied, tased, you're a bank robber. But if you walk in and you say, may I have my money, please? May I have the money that fits my rules? Well, now you're a client and you typically walk out with the money. So find your money, and your money should be whatever your plan says your money is. Guys, this is the KISS plan. And the KISS plan is a stepping stone on your learning journey. It's designed to optimize your chances of success with the high probability trend trade and the 50-50 trade as a brand new user. And I'm going to tell you, learn the high probability trend trade, guys. Learn the advantages. Learn to recognize them at the drop of a hat, and you will be floored at how many other trades you recognize, how many of the other opportunities present themselves. Through simulation, study, class feedback, continuous practice, you will create a plan tailored to your personal goals based on your experience reading the indicators. Guys, you're going to come up with your plan based on your ability to read the charts. But until you have that ability, why not trade the plan that has been proven to win more than it loses? Why not trade the plan that is designed to optimize your chances of success, that gives you the best case scenario for two different trades. And not only are you learning to read charts, not only are you learning to recognize advantages, but you're also learning to be patient because 90% of your day is spent waiting for the best of the best. And your simple plan for consistency, guys, it starts with never fight the large chart. Don't fight the large chart triggers. Don't trade into termination conditions. Go with the flow. The market's like a lazy river. And it's so much more fun to sit in an inner tube and sip a pina colada than it is to try to fight the current. Define your entry. And man, I mean your entry. Trading is a solo sport. Define your best entry. In the beginning, let it be the high probability trend trade. Make sure that you have the conditions met. I've never had anybody follow this checklist to the letter, truthfully, I have to say truthfully, and do worse than 70%. So guys, I'm going to give you a checklist that you can print out and put on your desktop. This is a great opportunity for you to be able to make sure that you're following rules, to make sure that you have advantages, to make sure that your chart read says that everything is the way it should be. I also dropped the KISS plan in the room twice because I didn't realize that it was scrolled down. Here is the checklist. And then I'm also, for you visual folks, and Rob, absolutely, all about the trigger location. I'm sorry, I didn't see that. Here's the exact same checklist with a termination that reverses the market. This is what it looks like. Same checklist showing you odds favorable, anything can happen. Guys, you have to drill these looks so that you can see them in a moment. Termination, potential to break, broken. Neither of these is high probability. Windows of opportunities, long and short. Guys, if you go through and you take these checklists and you police yourself, you'll never have to ask yourself, was that a trade? You can begin to ask yourself, were my rules met? Were my rules met for a long trade? Were my rules met for a short trade? Did I have the best of the best? And what's going to happen is eventually you're going to be so good at this one that you'll start taking the 50-50 trade, that area with the potential to break. And here's the deal, it's not broken, right? So let's go back to that little slide. The 50-50 trade does not have a clear path, so we're going to insist on momentum in an entry area, which means, first and foremost, we want to insist that it comes from a good top or bottom. We want to make sure that decisions were made at a key Fibonacci area that reversed the market and provided us odds favorable momentum on both charts. And then it tells you right here, don't take it with divergence. Remember, this is designed to optimize your chances of success. This is where 95% of you are going to go sideways and you're going to be like, oh, but I want to be in it. I'm not going to worry about the divergence. Or I'll type that I didn't see the divergence that printed 17 bars before my entry. But if you don't have it, enter at the area. And then it reminds you, hey, guess what? You probably shouldn't be in it with divergence. And then down here in management, it reminds you again that if divergence prints, exit the trade. Hopefully you guys are catching on to what kills a 50-50 trade, which is why you should be focusing on the high probability trend trade first, because this is the one that typically wins 70 to 80% of the time. This is the one that puts you in where the market is most likely to continue with nothing in the way. And then your management, guys, should be as mechanical as your entries for the new user. And as you grow, you will craft a plan tailored to your goals based on your ability to read the charts. But your management plan for the high probability trend trade revolves around your ability to get in where the market is most likely to continue. So if this is a concept that's escaping you initially, then you need to focus on your entries a little more because great entries create manageable trades. And when you understand where the market is most likely to continue, let's make that. You understand exactly where your initial stop should go outside of the window of opportunity. And what this does for you is it gives you the awareness to say, I can't put my stop right here because the market may continue from here. And I can't put my stop up here because I don't want to lose too much money because the market may continue from there. And if you chum the waters, they know where you are and they'll hit your stop, they'll laugh at you, and then they'll drop like a rock. I've seen it a million times. So understanding where the market is likely to continue allows you to put a stop where the market shouldn't go. and this stop will get hit. Every 100 high probability trend trades you take, you're going to lose 20 to 30 of them. Just accept it. Losses are a normal part of a positive equity curve. But what's amazing is with all those advantages, more often than not, you'll get a reversal bar in the direction of the trade. And once you get this reversal bar, you can put your stop 2 ticks above it, and you can say to yourself, man, the market's already doing everything I wanted it to do. If it comes up and hits this stop, I'm going to exit the trade. Maybe I'll look for a new entry, but I'm not going to keep my stop way up here because it's already doing it. Let's reduce our risk. And then from there, it's either going to hit your first target or it's going to stop you out. But if it hits your first target and you are honestly following this KISS plan, you have $100 in your account that nobody can take from you. You're also going to move your stop to break even, and you're going to say to yourself, with money in the bank and nothing to lose, I'm going to hold for that second target. I'm going to learn how to be brave, how to trust my indicators, and it's either going to stop you out break even, and I'm going to tell you, that doesn't sting too bad, or it's going to hit your second target. And your second target's only $300 in the or $200 in the distance, which means on 2 contracts, 1 high probability trend trade, getting out what is questionably early, but very mechanical, it's a $300 trade. And guys, $300 a day is a $1,500 week, and it's a $6,000 month, and it's a $72,000 year, give or take, for holidays and stuff like that. And that's off of 1 trade. Repeat what, TLC? From the beginning or management? Well, what's $100 a day? That's $500 a week, right? That's $2,000 a month. That's $24,000 a year from $100 a day. The idea is this $100, take the correct entry, put your stop where the market shouldn't go. If you get a reversal bar, reduce risk. And this is for the brand new user, TLC. This is for the person that isn't making money the way they want to make money. This is for the person that needs a little confidence in their life. Let your first target be quick, $100, boom. With momentum and a clear path, guys, that's not a hard target to hit. And then go to break even. And I'm going to tell you guys, you won't stay break even. Your plan will develop as you develop. You will create a plan with a more reasonable stop placement because the 5-1 fluctuates. But be willing to get knocked out break even when you're not making money every day. Be willing to get knocked out break even while you learn to read your charts. And if it doesn't hit you, TLC, keep your second target reasonable. You don't have to hit home runs. Base hits, right? Did you ever see Moneyball, ladies and gentlemen? Brad Pitt and, what's his name, Jonah Hill, about the Oakland Athletics. And they lost their star player. And instead of finding a home run hitter, they found guys that got on base because they found that statistically, it doesn't take home runs to win games. You just have to get on base. You need people that get on base more than they don't. Guys, this is getting on base, and 4 base hits is a home run. And 4 base hits is easier to collect than a home run. And I'm telling you right now, this is a great approach for the new user as you learn to read your indicators. So embrace the KISS plan. And I see a lot of people that follow the plan, and they stick to the plan, and they're adamant about the plan. And then about 30 days in, they decide that they're too smart for the plan, and they go sideways. And guys, we've all done it. Once again, I'm going to raise my hand. I decided that I was too smart for my checklist at one point, and that's typically where bad things happen. So if you recognize, man, I'm not doing things the way I used to do them, I'm not finding the success that I used to find, I keep trading with divergence into these 50-50 trades, guys, go back to what you know works. I've had people get funded on Apex accounts from the KISS plan. I've had people win 70, 80, 90% with the KISS plan. And it all stems around the idea of momentum and a clear path and giving yourself a high probability trend trade. And I want you to see something. If I circle this tail, this is how you study. Right to resistance inside of favorable large triggers. And then with odds favorable and a clear path, guys, this one didn't work, but it was a small loser. And then that one did with all that momentum. All you have to do is find your groove, learn to read the charts, be able to recognize it in the moment, be able to open up a workspace and say, I have weak triggers, but I have a clear path and I have two divergences and there's no areas inside of favorable large triggers. 2/3 of my advantages are gone. I'm okay not taking a trade. You see how quickly that happened? Smalls are not wide, large are up. Guys, but 3 divergences suggest this market's probably going up. I'm just waiting for my rules to be met, and there it goes. And now the momentum is up, right? And I'm into these one-to-ones, and this is the NASDAQ. But I do have areas inside of favorable large triggers. Could I just wait for a pullback and see if I can find a long trade here? I feel like I could. But the NASDAQ is not crude oil. The NASDAQ is not ES. And there's little things that are different, guys. Are there any questions about the high probability trend trade? Are there questions about momentum? Are there questions about a clear path? So this is what Cindy was referencing this morning. Guys, this is chart reading 101. And I put this together because I realized that one of the biggest challenges new users have is learning their rules at about 60%, a half-truth, if you will. That people say, well, I had odds favorable momentum, when the reality is they had triggers that were beginning to weaken. Or I had a clear path, when it turns out that there wasn't a clear path at all. So this chart reading 101, guys, and I'm telling you right now, if you go through this drill, you will be a better chart reader, and you will be a better chart reader quickly. Take 25 pictures of strong triggers, drill that image into your mind, but don't just take the pictures, guys. And this is where I created the 101 section in the spreadsheet. Don't just take a picture of strong triggers. Take a picture of strong triggers, describe why they are strong triggers, and talk about what the advantage is to you when you have those strong triggers. So not only do I know what it looks like, I know what it's giving me. I know the advantage, and I can begin to speak to myself in terms of advantages. And then, of course, the other side of that is understand that weak triggers, smalls are inside of the large. It's a loss of momentum. Anything can happen. So I'm drilling these into my head. I'm learning to recognize these, guys. 25 longs, 25 shorts, 25 strongs, 25 weaks, 25 clear paths, 25 terminations. And guys, you have to describe, you have to annotate, you have to get your brain associating advantages and disadvantages with looks on the charts. And if you do this for each individual picture, don't copy paste, write something different but the same every time. It reinforces the looks and it reinforces the advantages. And then what you're going to do is you're going to piece these together to create a trade. Do you notice that strong triggers is green and weak triggers is red? And a clear path is green and a termination condition is red. 50-50 look is yellow because you have to pause and make sure that you still have strong triggers. And then there's your entries. And guys, you should be able to click on strong triggers, and you should be able to click on a clear path, and you should be able to click on an entry area and say to yourself, with strong triggers up, with a clear path, I'm going to find an area of support inside of favorable large triggers. So you're putting those three together to create a trade. You're committing the memory. That was hard to say. All right, guys, I'll let you watch the NASDAQ for a minute. I'm going to take 5 minutes. I'm going to run a lap. Take a break if you need a break. When I come back, we're going to start looking at your charts. We're going to talk about advantages. We're going to look at the rules. And then I will answer whatever you guys need answered. I'll be back in 5 minutes, guys. Go take a break if you need one. Go save the world. I will. I like that. You so. No, Ellie, you don't want. Doors closing. Go on, go get Mama. All right, guys, let's get into it. So what I'm going to do is I'm going to go up to the very, very top of the room, and I'm going to start clicking on the charts that you guys posted, and we're just going to talk about them and see what we have and what you see and what's going on. And guys, I wanted to share this one first. This was my favorite picture yesterday, and this one makes me really happy. Jen posted this at about 3:30 yesterday afternoon, and she said, "That's 3 hours of no rules met for me. No trades, not my money." And I'm going to tell you guys right now, that's the hardest thing that you'll ever do, is to watch the market bounce and fluctuate and just realize that you don't have a statistical advantage. And then to do absolutely nothing, that's the stuff that just, it warms my heart so much. And then this one was posted by Paul yesterday. I don't think he's in here today, but I wanted to show this one. When a termination creates a reversal, it creates an advantage. Guys, this is a momentum trade that I see a lot of you trying to take. It's also a trend trade, high probability trend trade, right back to the areas in support. But when you have momentum everywhere, guys, it's hard to not win. And this is just beautiful. Termination, reversal, odds favorable, clear path, no divergence, right to support inside of triggers, easy money up to the problem area. Guys, this is the one. That's what you're looking for each and every day. Joel, odds favorable, clear path, beautiful entry. And man, this one just danced. Second lower divergence and you managed out. Joel, great management. They don't all win. But when you take a great entry, you've got room to manage. You don't have to lose when things change. And that's an outstanding example of how you may take a trade, and sometimes you're going to have to take it twice. Sometimes it's just going to drop, and you just don't know. But you learn to trust the entries. You learn to trust the idea that momentum is a winner, and Cav takes advantage of momentum here. It's coming from a pivot. That's anytime it changes direction, it is a pivot. But you do have odds favorable. You do have a clear path. And Cav, this is awesome. Cav says, when I have odds favorable and a clear path on both, why don't I just go ahead and try and capture a little cash, and I'll run my stops tight, and then we'll make decisions on whether or not I should take that trend trade. And because of the NASDAQ and those small triggers against you, you chose not to take the trend trade. Great job on that one, Cav. Momentum for the win. Momentum for the win. Let's see what we have here. Not a momentum trade, nor a high probability trend trade. This is odds favorable into a termination. Above one area, below the next area. Bought here above the yellow 1-to-1s, type stop, few ticks below, type management based on the trading plan. So, Miss Jen, if I may ask, what part of your trading plan, are they not? Can you guys not see them? It says that I'm streaming. Hold on. Jen, you can see it. Guys, give me a Y if you can see my charts. Cav, it may be you, bud. Yeah, I think it might just be you, Cav. A little reboot. Cool. So let's talk about this one real quick. Obviously a termination condition, right? Jen identified it. She goes, hey, I'm going to take a shot on a termination condition because of the level of momentum, because of the fact that I'm coming from a termination, because of the gap between the small and the large, and everything says down. And is it fair to say, Jen, that because of those things, because of those things, you're like, you know what? I'll take a shot. No divergence, Let's do it, right? Um, and I could be wrong here. The challenge that I see is one, you're on the wrong side of the one-to-ones, which is okay, but you're below the mid band, and this is where the market is most likely to continue. Does that make sense? Just from rule number 3. If I'm going to take a shot at a trend trade to take this one, I can clearly define where the market is most likely to continue. And you got stopped out at the spot for continuation. And I'm not saying that small risk isn't good, but what you didn't do is one, you didn't go from the lowest point, so you're already past the first point. And the expectation should be it's going to go to the next one, right? This one didn't cause a bounce. So it makes sense logically that that's the next one where the bounce may happen. Does that make sense? So when you didn't take it at the one-to-ones, I think for the average user, this is where it's okay to say, you know what? I'm going to let my entry come from here, and then my stop will go where the market shouldn't. It's still low risk, but you're giving it the best chance that you can. But then, of course, the reality is that trading directly into support with absolutely no triggers through it, you know that 60% of the time this ruins your good time, right? So if you're going to take a calculated shot at breaking a termination, give yourself the best chance of success. Yeah, but there's a reason for tight stops, and yours is an arbitrary stop, if you will. Your market is exactly where the market should go. Guys, a tight stop doesn't guarantee you a win. A tight stop doesn't mean that you're trading logically, if you will. A tight stop means you're scared to lose, right? Because you're beyond the area. So what's protecting you? Nothing. Nothing at all. And that's one of the things where we're pretty good at what we do, Jen, to the point to where we can say, if I go past this area, then it's likely to hit this area, which means that's not where my stop goes. My stop goes where the market shouldn't. And of course, the best of the best is don't trade into termination conditions. That's right on the list. If you guys remember the little tongue-in-cheek thing, the book my brother wrote, How to Commit Financial Suicide, there's two things that are the most common losers of trades for new users. The first one is trading against momentum, hoping that the market does what you want it to do. The second one is trading into termination conditions. And this happens so often with new users that my brother created this silly little book about it. All right, Cav, termination, and that's okay. For sure, Jess. Give me 1 second and then we'll knock one out for that, okay? Termination, and the market rolls. And you know what? I like this one, Cav. It's into a termination again, but you let it close the gap back to the synthetics. And I think that is the key to finding success and having room for the correction here. Letting the termination create the reversal, small triggers come down, but Cav knows that it's likely to go up to those synthetics and he doesn't jump in here. He lets it pull back to the triggers. And Cav, this is beautiful, man. This is a great job at capturing quick profits off of a good termination. All right, Jas, let's talk about it real quick. And I'm going to go just straight to the tutorial section, and we'll go to the entry section. So you know where to find this if you want to talk about it. That's the wrong one. So trade entries. So Jas, the biggest thing is understanding where the market is most likely to continue. And this is the most important part for understanding where the stop goes. Because if you're not comfortable with this concept yet, it's okay. There's ways to study it. But Areas inside of favorable large triggers are where the market is most likely to continue. Are you comfortable with that? If the rules are met for a high probability trend trade, my expectation is that it's going to bounce off of areas inside of favorable large triggers. Does that make sense, Jess? Cool. So the awesome thing is that we can put stops 4 or 5 ticks outside of that window of opportunity. This is where initial stops go for high probability trend trades. But you have to ask yourself, and the terminology is, where shouldn't the market go? If it should continue from here, then it shouldn't go from here. Or if it's a momentum trade, if the momentum is going to continue up, I shouldn't get a stop. I shouldn't get a reversal bar on the wrong side. So Jess, what happens is your ability to read charts puts you in a position to understand where the market is likely to continue. It also gives you the ability to understand where the market shouldn't go. And that's the basic premise for finding the initial stops. And that's one of the reasons why, and let's do this real quick. So the fear of missing out is real. The fear of missing out is a very real phenomenon for people. And I want to do this. If I create a window of opportunity where the market is most likely to continue, my initial stop goes where it shouldn't. And that's the very basic premise. But I want you to see something. If I jump in up here, my stop still has to go here. If I jump in on this little uptick, my stop still has to go here. If I don't wait for the areas, my stop still has to go here. So where the market shouldn't go doesn't change based on your entry. So if you jump in early, if you embrace that fear of missing out, all you've done is increase the size of your loser if this is one of those ones that loses. Does that make sense? And that's why we use that idea. And then the flip side is when you know where the market's likely to continue, and this was kind of the example for Jens, putting a stop just above these yellow 1-to-1s inside of favorable large triggers, that's where the market's going to hit you and go, just to teach you a lesson very often. So great question. And guys, these are the concepts that kind of come together. As the more you learn to read your charts, the easier these reads become. All right, Jim. Smalls barely through pink divergence. Divergence prints, 3 divergence at a price range. It's only 2. Did not take a short back to the mid-band large support area, large above mid-band. So termination condition, divergence, that's your second divergence. Jim, you're comfortable with the, so not yet, which 20% is, hold on. Let's take a picture. There's 1 divergence. There's 2 divergences. This right here is the potential. Jas, you can do whatever you want. I've never met a successful day trader that didn't use protective stops and commit to them. You don't have to. You can leave it all willy-nilly. The market would love for you to let it run against you a couple $1,000s. Somebody on the opposite side of your trade would love that. So Jim, divergence either is or is not. When you see this number blinking, it's the potential, but until that magenta line prints, it's not divergence yet. So this is only the potential for divergence. But you're absolutely right. That's not a great look. It's a 50-50 into a termination with divergence. Does that make sense? Yeah. So right here, if you're in the trade, I'm not exiting because of the potential. But if I am in the trade and divergence is a reason to exit, well, then I can put my stop 2 ticks below this reversal bar marker because that's where divergence will be true if it's going to be true. But what you'll see a lot, and let's see if we can find an example of it, I have the potential for divergence right here. But until the 3rd bar, it's not divergence. And over here, I don't even have the potential on the smaller chart. Oop, I just got it down. Let's see if we can find... Oh, I only have one chart open. I'll open up crude oil too, and we'll find some real world examples. Yeah, potential. My brother taught it to me in his eloquent way. He's about as bad with analogies and about as filtered as I am. He goes, divergence is like pregnancy. It either is or it is not. There aren't different levels of it. And the potential to get pregnant is not the same as being pregnant. And sure enough, you did get the second lower. It happened on the third bar, and you didn't take the trade. And there's nothing wrong with not taking that trade, Jen, because you had enough problems that you didn't feel like it was worth taking. Does that make sense? You had a 50-50. You were right into a pivot stop out. The market had already given you 3 divergences against the up move. You were coming from a termination condition, but man, that's one of those ones where you have so much wrong with it and it goes. And this is it. This is the market sitting on your shoulder going, hey, Jen, next time it sucks, let's go long. Just do it. What could happen? There's no long-term effects. You'll be fine. And it feels like the market lets you get away with breaking your rules just enough to get you to break your rules. And then Ron, I don't know what gap you're talking about. Oh, the gap to the triggers. Okay, price hits the mid-band. Everything says up. You go long at the mid-band because it's likely to close the gap. All right. Ron, this is kind of a new look for you. This is GASP, a trend trade. That's an even better trend trade. But that's it. Nice job. It's weird seeing you trend trade. All right, Andy, let's see what we have. A 5-1 gap or buy mid-band till it quits. I like it. All right, so Andy, bad bottom, 50-50, odds favorable, 1 divergence, into the area, quick profits. Got sick watching it get near you? Do you know why, Andy? Let's talk about a couple different things here. I love the momentum. Let's start with momentum. Momentum is amazing on this chart. But it is a 50-50 from a bad bottom. The thing that gets me, and guys, this is a challenge, and this is where you're going to have to make a judgment call, I think is the best way to put it. Excuse me. Is you're 1 tick off of Fibonacci resistance with divergence. But Andy, your ability to take the best entry with all of this momentum gives you time to manage, gives you a chance to collect some profits on this one. One thing about 1 tick off of fibs, guys, I like to share this picture when I see it. Fibonacci areas are just that. They're areas. They are created from thousands upon thousands of calculations. When you open your software, every move in the market up, every move down, every swing, every pivot is measured, projected, retraced, alternates, and it creates thousands of calculations. And then when the algorithm comes in, when all the smart stuff comes in, it decides which lines are the most important, which prices have the highest concentration. So your Fibonacci areas are just that, they're areas. And guys, I give myself a tick to either side of it. And if I don't hit the area, but I'm 1 tick off, especially if divergence prints, it's at least a red flag to me. Because this line came to be from about probably 100 lines. And that was just the one that happened to be in the center. That was the highest concentration. But there were probably lines all over it. And that's one of the reasons why you see the market dance around these key areas as well. But Andy, great entries give you the opportunity to capitalize. So nicely done. But I like to throw that little bit out about how they come to be, because it'll help you make decisions. All right, Adriana, let me see. Try and line up. So at 937, momentum, you take the momentum style trade, the jump in when the area clears, you get out, profits, I like it. And momentum trades typically turn into trend trades. So you end up at the tail end of momentum. It's not a 50-50 though, Adriana. What is a 50-50? Let's go through this real quick, just for the sake of language. A 50-50 means that 50% of your trigger lines are through an area and 50% are not. Guys, give me a Y in the room if this makes sense. This is a 50-50 look, and it means that this area right here has the potential to break with all that momentum. It's just not broken yet. So Adriana, where you entered, you very much had a clear path. You were at the tail end of momentum, but you had a nice entry area. And it acted as resistance off of there, but it's the right trade for continuation to take up to the next. So between the clear path and the entry area, the only thing that you didn't have there was the best momentum. So you put yourself in a medium probability trade scenario that says, hey, the momentum isn't perfect. Maybe if I get another divergence, I'll exit and wait. But Adriana, it never gave you the chance to. Your great entry creates a manageable trade. You get out at the first trouble spot, out at resistance, and this is a beautiful execution on two different trades. Waiting for the areas to clear, embracing momentum, quick profits on the momentum trade because they're not home runs. And then the only thing that I could nitpick on, Miss Adriana, is if you're going to let momentum get you in, let momentum take you out. Get paid on those. Because if you exit your second contract on the loss of momentum, you don't give all that back and you get more from your beautiful trend trade. Does that make sense? Nice execution. Very simple charts, momentum for the win, areas inside of favorable large triggers, making your life easy. And Adriana, can I ask you, did it feel pretty good? Not as much stress, not as much. Awesome. That's what I wanted to hear. Great job. All right, triggers rolled at the divergence. Well, no, triggers rolled below the divergence. And then you have a 50-50 with no divergence at the midband. And it does go, you're jumping in the middle. And you're fighting small triggers and it pushes up. And then you get divergence off of the fib on the 50-50 and you hold and then it goes down. That's interesting. 85.25, 85.25. So you're in at the midband. I love your entry, Cav. It's a 50-50 without divergence. Those small triggers are screaming against you, though. Do you see it? It takes a while for you guys to believe me on this one. So you NASDAQ traders, can you guys hear me? You NASDAQ traders, I say this at least once a day. If your small triggers are absolutely screaming against you when you get to your area, just pump the brakes, guys. This is a 13-2 chart. This isn't a 5-1 chart. And these are strong, strong triggers. And when they push like that, they'll act as resistance. And they do it right there. But if you wait for the close below, it establishes your risk. It gives you a better shot. Just a little NASDAQ nuance, guys. You're welcome to do whatever you want to do. But I'm telling you, it takes a lot of the biting of the nails out of it if you don't fight those triggers. And then Miss Cindy, same trade. You didn't have the fibs and no divergence. You don't, well, you still fight them a little bit. And you're in at the pullback, right at the pink 1-to-1s, the one line inside of triggers, and it makes it a lot easier for you, I think. Nice trade, Miss Cindy. Because on the NASDAQ, that's the only one. Guys, NASDAQ is a little different. Nicely done. And you had a beautiful termination. Everything about yours looks a little different than Cavs. And then Miss Jen, divergence, triggers roll, odds favorable, 64, 64. So you're selling into all of the termination conditions, right, Jen? Didn't learn your lesson on the first one. So you're like, I'm going to trade into Fibonacci support again. And then just a thought, call me crazy. If you guys are going to take these little snapback trades, there's a huge difference between trading into an area and trading from an area. This one, is it going to go here? Is it going to go here? Is it going to go to resistance all the way up here? Because of the bad top, is it just going to hold and go to the next key area? Adriana, you have no idea how happy that makes me. And Jen, I'm not knocking your trade. You had a ton of momentum. But you had divergence from a fib with a gap theory. And it was just, if you just let that break and set a trade into it, I think you're going to find that it serves you better than trading into these areas, guys. Trading from areas makes such a difference. And then Adriana, great job here. Look at that. It is higher divergences, but it's terminations. And look at the dance on the small chart. That's like a lambada. And what's cool is you didn't go long into resistance, right? And you didn't go short into support. You just said, how about if I sit on my hands and do nothing for a minute? Adriana, that's what mature traders do. That's what people that are committed to their rules do. Great job. And then Haji. No momentum and you go short. And I love this one. Notice that this isn't the first trade that you posted, Haji. Mark, don't look at this one where I broke rules, but look at how awesome I am here. So here we have a 50-50. You have an area for entry. There is a divergence. Problem with this entry is there's no way to see divergence till after the fill. So Haji, just throwing this out there. Just throwing this out there. And again, you guys do whatever you want to do. If I'm taking a trade where my rules say divergence means no trade, is it okay to wait and see if it prints? And only you can answer this, Haji. If I'm taking a trade where my rules say if this divergence prints, I can't take it, is it okay to not jump in early? Is it okay to say, I need to find out if divergence is going to print or not? And if that third bar prints and divergence isn't true, well, then I'll just hit sell now. But if that third bar prints and divergence is true, weaker triggers at 1-to-1s, it's an easy way to avoid breaking your rules. It's an easy way to avoid a potential loss if it decides to go up. So I love the trade. But this is kind of that maturity thing. Not maturity. That's not the right word. Experience. Experience is the word. Where you start to say, my rules before you get into the trade and wait because it's not there, right? My rule, and this is where when you know what you're getting into. My rules say that divergence on a 50-50 is a deal breaker for me. Therefore, I'll wait to make sure that it is or is not true. And if it is true, maybe I'll wait for it to come up and then work its way back down. and then you kind of adjust that entry a little bit so that you can stay in line with your rules. It's a great trade though, Haji. That's just where that's a little plan. Like when you know your rules, you get to do stuff. All right, this is Cav. Let me see where you get in. 14, 14. Got that one line out, everything down, clear path. You're like, let's go. Jumped in for the ride. These trades give me heartburn. I know they work, but they give me heartburn. And again, momentum, clear path, comes up, heads down, down you go. Just taking advantage of that strong push down. Nicely done, Cav. Divergence, weak triggers. Expectation is the mid-band because of divergence and weak triggers. And Cav says, let it dance. Let me let some triggers roll. Let me get a reversal bar. And I'll take the trade. Got in on the pullback. It looks like you waited for it to start headed back up and get above the halfway point on that bar. Am I reading that right, Cav? You didn't know if it was going to, because it already cleared the mid-band. You're in the middle of space, didn't hit them down here. You said, let it start going back up. Let me let it start doing what I want it to do. And Haji, I like this one too. He doesn't wait for the reversal bar, but see how he lets it start to go? He's like, all right, we're starting to go up. I'll put my stop right here, and if it doesn't go from here, I'll take a small loss. But this pattern says I'm likely to hit the mid-band. Nice job, Cav. And then just resistance, strong triggers, pull back to resistance, easy trade. That's the easy one. Nicely done. And then Josh, same thing, odds favorable, clear path, pull back to resistance, just missed it. Don't get yelled at by Mark, Rule 5 met. The hell's Rule 5? Good top, yes. Odds favorable, yes. Entered inside of favorable large triggers. Damn it, Josh, now I gotta yell at you. Areas inside of favorable large triggers, not inside of favorable large triggers. That's what we write when it doesn't hit our area and we get in anyway. But you had every advantage. Every advantage. It just didn't get you, and you're like, well, hell, let me make some money. Hence Rule 5. That is Rule 5. And then it comes back and it gets you. It comes back and it goes, dude, Josh, my bad. I forgot you. You take the perfect entry, and then, I don't know, sand got in it, something dried up. Why the hell did you exit? Let's talk management. With odds favorable, clear path, 1 divergence, 8 ticks. Okay. So you're trading 1 contract right now? So you're just looking for $100 a pop. Okay. So is it your risk that needs to be lowered, or is it your trade selection? And I don't know the answer. Okay. So just throwing it out there. That's the best trade ever, right? Like on a scale of 1 to 10, that's a 32. That's beautiful. Lock in a couple if you're scared, right? Let it do what it's doing. So what you're doing is you're trading emotionally. And what you've done is you've substituted, right on, so today you're relaxing. I like it. Is that not a jump in when it doesn't hit your area and you just jump in anyway? Okay, just making sure. And you knew it was, so you jumped out before your 8 ticks, even though everything said it was likely to go down. Those are the ones that get tough. And Josh, this is what I did when I first started. is I would take the entry and I was like, it's the best entry ever. And there'd be a little fluctuation and I would crap my pants and I'd get out for a tick and I'd do that 25 times over the day. And after commissions, I was down $100, even though I was like 100% winners. So if you're having a day or you had a bad day, right? And you're like, man, I just got to get my poop in a group. I've got to kind of reassess everything and build a little trust. Man, it feels like a defeat to so many people, and I don't know why. But if you know you're shook and you know you're not comfortable, is it okay to sim for a day and just go, you know what? I know that it works because I know how to do it. I know that the advantages are there. I know that everything is good. I had a bad day. I had a bad morning. I had a bad moment. Let me get my shit together. Let me simulate for 4 or 5 trades. Um, right on. But it's simulator doesn't fix it, Josh. Simulator doesn't fix it. Simulator forces you to refocus, but you have to fix what was broken, right? You had a bad couple days. I've seen 1 or 2 charts from you in the last day, and they're all winners, which means that you're either you know exactly why you're having challenges hiding in the corner. And guys, if you know why you're having challenges, whatever, don't ask for feedback. That's cool. But if you're not sure, if you think you took the right trade and you're still finding yourself losing, if you think you're in the perfect trade and you're still getting run over, drop them in the room. Let me give you a set of eyes that has no attachments to your trade, and you'll be amazed at what I see that you don't see. You jumped in and traded 50-50. Okay. See, so you can identify it. You have the skill set to identify it. Not everybody does, and that's the beauty of what we do here. Is I'm so glad to help you guys out. All right, Miss Jen. Not a strong top because the triggers got through, but at this point, it's a moot point because you're a million miles away from it. You have a weak triggers. It pulls back to the midband. Large triggers don't follow. Definite continuation down. So you take a beautiful trend trade and take it right to Fibonacci support. Isn't that easy with momentum and a clear path? Momentum and a clear path. What an outstanding recipe for success. I know. And Jen, we have to take the other crap so that we believe that there's an easier way to do it. Um, everybody takes the path of the highest resistance initially, and then you realize when you take this one 10 times, and if you went from 28 to 18, that's $200 per contract. You just got to be patient. And the longer it takes, the harder it is. And then Cav, man, if I'm going to see a momentum trade, this is the one, brother. Odds favorable, and instead of trading into it, you let the smalls get above and trade from it. Cav, I want you to give yourself a high five. And then when it gets to the wrong side of the smalls, you're like, I'm done. That's the one, right? Trading from the area, not into the area. Not into the area. Look at the bounce. 1 bounce, 2 bounce, 3 bounce, no bounce. But how many times do you have to trade into an area to believe it? And I think that's what this class is so great when we get to, present these things and see these things, and you really get to the point to where you're like, man, I've made this mistake 10 times, but now I believe it. And that is a loss that I no longer have to take. And that is a loss that I no longer have to take. And that is risk that I no longer have to leave on a trade. But when it's odds favorable on both charts and everything is screaming, just boom. What do you mean, Gino? What just happened with what? I don't know. Was there news today? Did you check your news? No? You want to know what happened then? I can tell you exactly what happened. Somebody with a metric crap load of money made the market go one way, maybe fast. Somebody that wanted the market to go down made it go down. And then somebody that wanted it to go up fought against them. That's all it is, man. Who knows? Matt, killing it. John Novak. John Novak does not move the market. He believes he does. Matt, rock star. Pivot stop out's a termination condition. I'm not going short into it. Notice that there's also 3 divergences in the same price range. Absolutely beautiful. It saved your bacon, didn't it? Where's that SOH? I'm going to start using that. Sit on hands. But you took the short to it. Perfect, because you knew where the market was likely to go. Guys, I told you, once you start to learn how to read your indicators, you'll understand where the market is most likely to continue. You'll understand where the market is likely to go. You'll also understand where the market is likely to stop. And then all you have to do is find your rules met. Strong triggers, I love it. No areas inside of favorable large triggers. Isn't that crazy? Rule number 3 said, hey, sit tight. Then Matt, your pivot stop out took you all the way to the midband, and once you got to the midband, the large triggers were a full bar away. That's the gap theory. And now we're trying to figure out what they want to do. Do all of those sellers want to keep pushing? Because I bet you they were trying to get to that fib. But I do have a termination. But that was a termination. Let's see how they reacted at 81.70. A lot of you probably went short right there because you know that they love fibs, guys. And now that we're into the fib, if you're feeling left out, you're going to try to trade into it. But now it's a termination condition right after a pivot stop out. You guys see how that worked? Termination, right to the termination. Off the termination, triggers roll, pull back to them, go to the next termination. Isn't that pretty cool? All right, now who's going short into support without triggers through it and divergence right off of it? Jen, you've already done it twice today. You gonna do it again? Hell no, she says. No areas inside. Man, isn't that a bummer? You can just post it in the room. So guys, that's the second hour. I'll leave you guys with crude oil. Is there another market you guys want me to see? I know a lot of you are trading the S&P. Let me pull up the S&P. So while that loads up, I'm going to take a break, guys. When I come back, since there's no more pictures, unless you guys ask a question, we're just going to trade the market on simulator, wait for our rules to get met. So I'll be back in about 5 minutes. Sit tight. Go stretch your legs. Making me all smiley. All right, guys, here we go. Hey, Jen, good job not going short into that termination condition. Is it just me, or is it freaking amazing to know where to not go short? Is it just me, or when a termination creates a reversal that gives me odds favorable, at the drop of a hat, I can say, yep, this is my trade, just above support, inside of favorable large triggers, and this is where the market is most likely to continue, and if it pulls back, well then that's my trade, and if it doesn't, well then it's not my money. Pivot stop out, Cav, gap theory, Cav. Did you catch that? After the fact, when price reaches the mid-band and the large triggers are a full bar away, yeah, gap theory got you. And then Ron, termination, divergence, there it is. The counter trend trade really shouldn't work, but does trade. Nicely done, Ron. Oh, look at that, guys. How's that for calling your entry? Putting your stop where the market shouldn't go. Where is $100? 18. There's my $100 profit target. Oh, that was fast. Let's go break even. What do you think? Does everybody see what we did here? We took odds favorable momentum after a termination condition. We waited for the pullback to the area inside of favorable large triggers. We already got paid at $100. Man, I wonder how far it's going to go. Should we do the $200? Because we missed it. We already hit 200. We'll put it back. We'll see if they come get us. Guys, this is your opportunity to have a question. To say, hey, you know what? Mark, I'm not sure why you did what you did. Help me out. You took your 100. I'm still break even. My rules say stay break even. It's not a second lower divergence. It may come get me. Hell, I don't know. There we go. Made my $100. 2 divergences on a 50-50 is not my trade. And guys, of course, you could have gotten out of that one a little sooner. But this is all we teach, guys, every day. Termination, full reversal, odds favorable, pullback. What do you think? Should we go again on a reversal bar? Absolutely it is, Matt. So you made your 100, you were up 200, and you gave it back to break even. That affects your trailing very much. That's not how I would have managed it, but that's exactly how, there we go. There's my reversal bar. We'll take another one. Just for grins, right? It's a 50-50. It has 2 divergences. It's a good bottom. The momentum is great. We waited for the pullback. Ron, you had a fib at 22, right? Now if I get a third divergence, I'm out of the trade. If I never get a third divergence, well then let's just have some fun going to the upside. But guys, this is a 50-50. It has 2 divergences against it. So we're going to talk about what we're up against. I'm not saying that this is good. Well, it's not a clear path, Jen. It's a 50-50 trade. 2 divergences is pretty bad on a 50-50 trade in most cases. Wouldn't you agree? So the idea is you have to know what it is you're up against. You have to know what kind of trades you're taking, and that's what lets you know how to manage it. It's not realistic to have expectations of this look going 70 to 80% of the time. I know that it's a 50-50. I know that two divergences is problematic, and I know that a third divergence ruins my party. So now my stop is where this divergence will be true should it decide to print. Does that make sense? And that's exactly right, Matt. Because those large triggers aren't through yet, this is not a high probability trend trade. But because of the termination, because of the level of momentum, because of the reversal bar, because now the smalls are turning, you may be able to capitalize. You may be able to take this trade and still find a way to get it. So what's my exit condition? A third divergence is my exit condition. If it never happens, I never exit. If it does happen, I take a loser. But am I making a calculated risk? Am I making a decision based on my large chart, the momentum, the great bottom, the pivot stop out, the super strong triggers? But the fact of the matter is I'm still at a decision-making point. Until those large triggers break through, I'm still at a decision-making point. I'm still in a spot where I don't know if it's going to break or hold. 50-50, nice, money, beautiful. Whoops, hold on. I have to go break even because we hit our target again. Should we let it run? What do you guys think? Do we let it run or do we take 200? Andy, that was great management. Tony says let it run. So how about third divergence takes me out? Stop is appropriate. Third divergence took me out. Never even let me. So now I have three divergences in the same price range, guys. But look at that. I made $212.50 just through chart reads. Just through going through. Reading my charts, taking the information. Andy, 50-50, good bottom, one divergence, perfect entry, quick profits, out at trouble. Andy, I love this trade. You have a special level there, Matt? It broke, but my rules said I had to get out. That's what my rules said. That's okay. Has anyone ever been mad if somebody handed you $200? Now I have momentum and a clear path, don't I? Do I still have an area inside of favorable large triggers? What are the odds that it'll come back and get us again? Guys, I'm not telling you to take trades. I'm only talking about whether rules are met or rules are not met. And it's got to be your rules, not my rules. So right now I've got momentum and I've got a clear path and I have one spot on this chart where I anticipate the market to potentially continue. One area inside of favorable large triggers. Give me a Y if you're brand new with me here. Jas, does that make sense? Matt, I know you get it. I've seen your entries. This is all we do. I have zero control at this point. Rob, does it make sense? You made 400 on that trade. Beautiful, Jas. Guys, the reality is each and every one of you can make money with this software, but you have to learn the basic reads. And then Matt, now your mid-band is on the wrong side. Now your momentum is slowing down, right? My rules aren't met anymore. And it really is that simple. That's momentum. And then that is a clear path. My small triggers are below the reversal bar marker, and this is the NASDAQ. So for me, that's no trade. That's a pivot from nowhere. That's triggers that don't match. There's no trade. Weak triggers, weak triggers. My only area is on the wrong side of things. How far is it going to retrace, guys? I don't know. But you have to be able to go through and you have to be able to understand what you're looking for. And the easiest way to do that, ladies and gentlemen, is if you circle a tail, look at where it pulled back to. And that's the thing. If it keeps going, it keeps going. There's your mid band, right? Do we just buy it arbitrarily, even though it's not inside of favorable large triggers, and say, you know what? If it goes down from here, it can get me small risk, mid band. But with this look in a clear path, what am I looking for? 25, 25? There's my $100 right there. So now I'm break even. I have momentum. I have a clear path. I just didn't have the best entry area. So medium probability, I'll manage assertively. I'll take profits. And then it either gets me or it doesn't, right? But the large chart still says up. There we go. I'm out. Break even. But that is 3 medium probability trades inside of 15 minutes, ladies and gentlemen, and my ability to read my charts. 0 losers. I'm up 325 in profit. And it was pretty low stress. And you're going to get to a point where you can read your indicators that fast. You're going to get to a point where you can say, I see this, this, and this. It's worth taking a shot. Does that make sense? And low stress comes with hours behind the wheel. Amen, Matt. I'm going to tell you guys right now. Oh, Andy, look at you. You took the one I missed, brother. Andy said, with odds favorable and a clear path, I'm going to take that one. I'm willing to sacrifice because that third divergence is higher. And Andy, you traded better than I did on that one. Nice job. Guys, Nexgen is the greatest software you are ever going to find. The plan is simple. The plan is focused. The plan is repeatable. But the only thing is you've got to learn how to use it. You've got to learn how to use it. That's what this classroom does, guys. I spend 15 hours every week. 15 hours every week. Giving you guys feedback on everything that you do. If you're working with Nexgen, Mark, or Cam, or Chris, they're going to reinforce as well. But you can build a foundation in this classroom. You can put yourself in a position to understand what the software is telling you. You can create scenarios where you have a statistical advantage every time you pull the trigger. And I'm going to tell you, just like Matt said, the only difference between me and you is I'm 3 years ahead of you. That's the only difference between us. I started where you started. I learned to trade the same way you learned to trade. I took pictures. I used a spreadsheet. I participated in class back when I wasn't the guy teaching it. And here I am. And it's a marathon, guys. So that was a pretty easy $325, wasn't it? Pretty low stress. There's that pivot from nowhere. No areas inside of favorable large triggers. Now I'm at a mid band, but I've got odds favorable momentum. That's not a termination condition, which means that if you went short from the mid band, you were well within your rights. That's a pivot stop out with weak triggers. Ugh. Does anyone recognize that? Anybody go long from the mid band? Or short from the mid band, sorry. Into the area. So what do you guys want to talk about? It's 11:15 a.m. You've got me for another 40 minutes. What can I help you with? Anybody? Is everybody so good at this that they just don't have questions? Matt, I draw. I draw in between trades. Talk about NASDAQ and the rules? Sure, Cindy. Thank you. Little known thing about me, Matt, is when I'm not working with you guys, I'm doing this stuff. I draw on people for a living. Actually, I day trade for a living. I draw on people for fun. So I have a sketchbook and I just draw. I keep my mind busy and wait for my rules to be met. So NASDAQ, guys, let's talk about it. One thing that I did for you guys, very nice. I'm probably about 60%. My legs are covered. My left arm is sleeved. Right arm is about halfway sleeved. But I can't see my back, so I never committed to a back piece. And this shit hurts. So NASDAQ, more than anything. Oh my gosh, more than anything on the NASDAQ, ladies and gentlemen. Large chart rules have to be met. Large chart rules have to be met. The NASDAQ moves about 5 times faster than any other charts. Matt. What do you mean? Compare them to what, Cindy? Compare them to each other? You don't. They're different markets. That would be like comparing your steak to the fish dish. So, okay, I see what you're saying. So let's do that. The two charts, and Jas, I'll get yours next. So for crude oil, the ES, gold, the Russell, feeder cattle, your large chart is a 13.2 chart. Your large chart is a 13.2. So for those same ones, your small chart is a 5.1. And these are the easiest markets to learn on, guys. These are the ones that are slower. There's less crazy fluctuation, stuff like that. So for the NASDAQ, this is a 34.5. This is 3 times larger than the large chart for crude oil or the S&P. And your NASDAQ small chart is a 13.2, which means that this chart is the exact same size as the ones you should be learning on for your large chart reads. And why is that? That's because the NASDAQ smokes crack. And guys, the NASDAQ moves fast, and the NASDAQ moves so fast that we have to slow it down with higher time frames. And what that does for you is it affects the entries. The large chart rules don't change, guys. The large chart still needs odds favorable, and the large chart still needs a clear path, and you still need to trade with the direction. But what happens is your small chart, if you're a NASDAQ trader, Cindy, would you go short against those triggers on the large chart? No. So the same is true, guys. If you're trading the NASDAQ, let's see if we can find an example real quick. If you're trading the NASDAQ, that 13.2 chart, don't fight those triggers. See how it's odds favorable, clear path, pulls back to the area. These are your small triggers, and they're working as resistance. They're working against you a little bit, guys. So when you trade the NASDAQ, one of the best things you can do is let price get to the other side of that problem. But this is a market that's a little different. And if it never gets to the right side of it, well, then you don't take the trade. That's the difference between the NASDAQ, guys. Is this large chart or this small chart on the NASDAQ is this large chart, and you have to treat it accordingly, which means that you don't fight the small triggers on the NASDAQ. It's like one of the worst things you can do. Does that make sense, Cindy? Go through this spreadsheet. This talks about messing it up. But that's the thing, is because the chart sizes are different, because this large chart that runs everything on the S&P, crude, all that sort of stuff, this is your entry chart on the NASDAQ because it moves so fast. It demands a different level of respect. I hope that makes sense. Awesome. All right. Jazz, large chart when bar is in transition period, changing color before printing full bar. If you want to trade, wait before this bar prints red or green. No. Jazz, I don't have any rules based around the color of the bars on the large chart. Does that make sense? The only rules that I have are that the large chart has to have odds favorable momentum, and the large chart has to have a clear path. And this bar is going to be in transition because what happens, and this is a good example, the top of this bar, Jazz, is right there, right at the beginning of a pullback. Right at support, right at those triggers. And then the reality is if this bar goes up, it'll go from red to green. And this will end up looking like a tail. Oh, the background color. If it's in transition, then you probably don't have odds favorable momentum, because what happens is when the small triggers break above the large triggers, it paints green. And when they just eke below the large triggers into them, it paints red. But that's not odds favorable momentum, right? But the background color lets you know which direction you should be trading. And then once you establish the direction, Jess, then you can go and you can look for the momentum, because the only way that you can have odds favorable momentum is if the trigger lines match the background color. Does that make sense? Cool. Check it out, guys. Termination, odds favorable, clear path, perfect entry. There's your reversal bar, reduced risk. We have to get here for our first $100. Can we take it off at 90 because there's a trouble area? Well, we didn't have to. And now I'm break even, ladies and gentlemen. There's another $100. Fits the rules. Termination, odds favorable, clear path, no divergence, perfect entry. Where's $200? 57. So we have to get to the fib to collect our 200. Give me a Y if you see it, ladies and gentlemen. I'm break even plus 1 here. I'm going to pay for commissions because if it comes off of 1-to-1s and a divergence high, I'm not going to wait for divergence to print. I'm not going to let it get back to break even. Does that make sense, everybody? That was a high probability trend trade. Long, crude oil. The same pattern that we saw in the S&P, the same pattern that you see everywhere. Guys, if you don't know what I just did here, this is a great opportunity for you to ask. That was another rules-based trade. How many are we going to take today? So we took a 50-50 from a good bottom, right? We took the signal after 2 divergences saying that we still had a shot. We followed our rules and exited on the 3rd divergence, even though it went up after. That happens sometimes. And now we're trading into a mid-band, but the mid-band isn't a termination condition because the large triggers are not a full bar away. But there's still trouble. I'm not going to lose, but I'm not going to arbitrarily put my stop up here and just get stopped out. So I'll cover commissions, and it can either come get me or it can go to the target. And then TLC, I entered at the area of support right there at triggers, just like the rule said, TLC. Right at support, right at the large triggers. The triggers are my correction point. And it did. It went to the triggers. My mid band was one tick above. The mid band at triggers. Use the language. The area at the triggers. Not just the triggers, the area at the triggers. I had to give it something to bounce off of. So guys, use the language every time. Area at the triggers. It's still going up with momentum, isn't it? Man, I wonder if this one's going to hit the second target or not. TLC, it's one tick above. So let's talk about the triggers. What are the triggers, TLC? The triggers are a correction point. Whoops. This is why I use specific language over and over. At the time of the pullback, TLC, I expect price to pull back to these triggers. That's the correction point. That's the moving average. Does that make sense? Give me a Y if that makes sense. This is where I think the market's probably going to bounce. Not okay. How about a Y? Because if it doesn't, okay means Mark, shut up. I don't want to hear it. That's 9 out of 10 times. So what happens is I have one line to create a bounce, and it's one tick off of that correction point, right? So TLC with odds favorable momentum and a clear path, I still know where the market shouldn't go beyond the correction point. But because the only line I have is a tick or above, that's where I'm taking my entry, man. That's it. And my stop still goes down here until the reversal bar. And then my stop, once it hit my first target, I went break even. And we're still just waiting, right? So if you're a tick in front of it, I love it. Doesn't faze me. If I'm below it, I won't do it because then I'm beyond the correction point. Does that make sense, TLC? And some people say if divergence prints off of 1-to-1s, they'll exit the trade. 2 ticks below this reversal bar marker lets me know where divergence would be true. But right now it's just potential. Initially, yeah, 11 ticks. Sometimes it is 5 ticks. Sometimes it's 17 ticks, TLC. My stop placement is dependent on where the market shouldn't go. My stop placement depends on where beyond that window of opportunity, beyond the correction point. So absolutely I'd risk 11 ticks on this one. But look, I already made $100 because my rules were met. I've already got another 50 locked in because if divergence prints, I want to be out. And I'm only 5 ticks away from my target at 77 with this momentum and clear path. Is that worth 11 ticks to you? Beyond the triggers, not, yeah. For me, absolutely, because this is my correction point, the triggers. So I'm going to put it beyond the triggers. Yeah. And I mean, we already made money, guys. We have nothing to lose in this trade. It's either going to go to 77 with all that momentum, or it's going to come back and stop me out at 62. And guys, even if it goes, Jas, you asked this earlier, even if it blows through 77 and runs for days, I don't care. Doesn't matter. I love getting out at fibs. I love getting out at predetermined. And I'm just not going to move my stops, guys. I'm not going to get caught up in this fluctuation. I'm not going to worry about all the little dancing on the small chart. I'm in. I've been paid. I've got nothing to lose. I've got momentum. I've got a clear path. My smalls are still outside of the large. I mean, holy crap. I can't find anything wrong with this trade. So I'm going to let the people that move the market do whatever they want to do. And my palms aren't sweating and my heart's not racing and I'm out. And ladies and gentlemen, together we have collected $475 in profit in the last 30 minutes. And now I've got these big, ugly split triggers. Now I've got some triggers up here and some triggers down here, and I don't really have an area inside of them. And guys, for me, that's party over. This doesn't give me an advantage. A green line floating in the middle of nowhere, that doesn't give me an advantage. Divergence from one-to-ones does not give me an advantage. But I sure had it here, and it was pretty easy to capitalize on it. Can't be submitted. The OCD ID cannot be reused. I'm not sure, Matt. Maybe. Divergence from a one-to-one, guys, you'll recognize that as a reason to get the hell out of a trade. And wait for a signal. Does that make sense, everybody, what I did? Especially you newer users. I talk about the same thing every day. I talk about the same advantages every day. I talk about the same trade setups. I talk about when areas are outside of the triggers, it's no longer advantageous. I talk about weak triggers and their ability to push lower. And guys, I'm telling you, all you have to do is study these looks a couple times. Give yourself an opportunity to be able to recognize them. Is anyone going long with a reversal bar? That feels like a little confirmation if I get it. There we go. Whoa, I got slipped. Man, that was not fast enough, was it? That's way too much risk into one-to-ones. Is it okay to just go, that's not my entry up here. I needed it here. That doesn't give me any room to manage. It still may go, but if I can't manage a trade, guys, I don't want to be in the trade. That wasn't my best entry. That was $60 above my best entry. That adds a lot of risk to a trade. I'm not comfortable with that off the one-to-ones. That's what my plan says. If you try to get in and it's not manageable, sit on your hands. Get out. It's okay to get out, guys. I spent 20 bucks. I spent 20 bucks. It still may go, but I have to be able to manage my trades. Weak triggers. So here's the expectation. If I have weak triggers, even with a clear path, this is my first problem spot, guys. So if you decided to take a short for some reason, you know where your first bounce spot is. Termination, odds favorable, pull back to support, money, money. Nice job, Joel. Can't go wrong with that one, guys. Large triggers are up, small triggers are down. Small chart says I got some down, but I also have these up. Mid-band. Who's got rules met right now? Anybody for a high probability trend trade? Nobody? Cindy, was that enough information for you on the NASDAQ, or do you need more? Still in crude? I like it. Okay. I just want to make sure. Guys, if I don't ever answer your questions thorough enough, let me know. NASDAQ, there's divergence from one-to-ones again. Nice, TLC. You had a chart with a question. Oh, I'm sorry, Jen. Thank you for that. Where's your termination? Hold on. Let me get the chart. Price has not reached an area. My large chart defines areas. So Jen, if you hit a one-to-one here, that's a great spot for a bounce. If divergence prints off that one-to-one, that's a good reason to hold your horses. But Jen, do I really have strong momentum? Let's be very honest with ourselves for a second. How about not at all? How about when Mark teaches his class and he talks about anything can happen, isn't that it? Perfect, 100%, without question? Absolutely. So what you have to avoid the temptation of doing is convincing yourself otherwise. Does that make sense? That's a little truth in advertising, ladies and gentlemen. And look what happened with those anything can happen triggers. Right to the midband. Large triggers are a full bar away. Say hello to the gap theory, ladies and gentlemen. The midband is behaving as a termination condition. Does that make sense, Jen? But doesn't that affect your judgment? Weak triggers, area not inside of favorable large triggers. That's 2 out of 3 rules gone. And sure enough, those weak triggers pushed us all the way back to the midband. Bugger those rules. And the large triggers are a full bar away, so let me create the next expectation, and let's see if this one is fulfilled. As in bad. I had a feeling. We don't want to douche around. I know, I'm with you. But guys, do you see how twice, based on patterns, we're creating expectations? We didn't have any expectations for that midband to break because the large triggers were a full bar away. We didn't have any expectation of the market just running down and running away because we didn't reach any place where decisions were made. It's just weak triggers. And we're creating expectations that I'm not going to try to go short at this 1-to-1 because that's the gap theory, and it may close the gap back up to the large triggers. Everything that we do is patterns. So let's see if we can find this one again. Weak triggers, straight back to resistance, continues down. Weak triggers, straight back to resistance, up by the midband, continues down. Right into 1-to-1s, all the way back to the triggers that were a full bar away. Let's see, there's weak triggers, and it pushes up. There's weak triggers at a pivot stop out, that sets it down. Do you guys see how this happens? Right into resistance, large triggers a full bar away. The weak triggers pushed it all the way up to the midband and resistance. So we can start to create expectations based on the patterns that we see. So I don't have rules met for a trade right now, but I have enough information to say don't go short. And maybe eventually, I say with a pullback to the small triggers after 2 divergences, I'll try to close the gap to those synthetic triggers because this is a bad top, because this is a midband that's likely to hold, because these are a full bar away. And maybe I'll say my expectation is that the continuation goes up to the next one. Guys, this is not a trend trade. This is not a momentum trade. This is not an HVA trade. This is nothing more than saying, I hope that pattern repeats itself. But if it doesn't, I can't be surprised to lose against triggers against me. I can't be surprised to lose when I fight the trend. Does that make sense, everybody? This doesn't fit any rules for high probability trend trades. This fights direction. This fights momentum. This is me forming an opinion that the market should close the gap. And it didn't. And I lost against momentum. And I lost against direction. And I entered from the middle of nowhere, and I hoped that this tiny little stupid chart would beat everything on the large chart. Does that make sense, guys? And now our beautiful $450 day is down to $230 because I formed an opinion and broke my rules. That's the part I want you guys to get out of this. I couldn't justify this trade in a court of law. I don't have any rules for it. I don't have anything that says that that's in my trading plan. That's not in the KISS plan. And it still may go. How many times are you going to try? And guys, that's one of the things that Simulator is amazing for, is it gives you the opportunity to make these mistakes and then say, son of a bitch, that wasn't a good one, right? I'm still fighting triggers. And let's go for you NASDAQ users. What happened when I try to fight those small triggers on the S&P? Cindy, did you see it? Tony the Tiger? Who else is my NASDAQ trader in here? Why the hell would I fight that? So this is my entry chart on the NASDAQ. What does that mean? That means that maybe fighting strong triggers against you. It's not even a trade, Jen. It's just a pattern. It's just a pattern that says this may happen. But because it's a pattern, it doesn't mean that it gives an advantage. It just means that this short isn't likely to win. It means that if I go short here, it's not as likely to win. If I go short here, it's not as likely to win. That's all it is. It's hoping. So this look right here says don't go short yet. The mid-band is a termination condition. That is the only thing that I get out of this trade. Be patient. You don't know if this is going to break because of momentum and direction, and you don't know if it's going to retrace because of the gap theory. And since you can't formulate something that makes a lot of sense, it's better to not trade, right? Odds favorable, clear path, triggers up, split triggers. You get in at the mid-band floating in the middle of nowhere, and it goes down to synthetics. Totally cool. You expect it. Out at the 1-to-1s because that's trouble. Out at resistance because trouble sucks. Beautiful, TLC. Jen, if that's what you think is best. TLC, did you see how the split triggers? Correction point, correction point. Yeah, no areas inside of it, and sure enough, it goes down to the bottom one. That's why I'm saying maybe a little confirmation. Beautiful trade, though. Nicely done. The large chart led the way, and it made it easy to execute on the small chart. Oh, look at that. They're still going for it, but look at the dance. What a headache. Matt. So NASDAQ. All right, Matt. I've got so many great lessons for you here. First lesson, not a termination condition, bad bottom, weak triggers. We just talked about it. So the expectation is the mid-band, right? And that's okay. You had odds favorable. Price did. Your triggers are still way below it. And then when you come to your entry chart, reversal bar is awesome, right? Did you notice, Matt, have you been listening about the large chart stuff? How these are your triggers on the NASDAQ? So when you got to your area for entry, look at where those triggers were. Do you see how strong they are against you? This is a little NASDAQ thing, Matt. This is where you go, you know what? It still says up. I still like it. It's still wonderful. Everything's good. And when it pumps the brakes right there at the bottom of the synthetics and gives you a close above, that's your go, man. That's the one that keeps you from continually getting run over on the NASDAQ. If the small triggers are less than a full bar away, it's okay to sit on your hands and do nothing. Decent spot, early entry. Man, how's that for patterns? That's a hard one to pick. Bad top, mid-band, gap theory, off it goes. Hey, Zen Trader. And there's support inside of favorable large triggers. Is it going to make it to the fib? That's a rules-based entry, right? Pull back to support inside of favorable large triggers with odds favorable and a clear path. I got in a little late. Should have been in at 32.50. Or, yeah, 32.50. That's the one, though, isn't it? Are we going to get some back from the mistake that we made? Maybe. Let's see if momentum and a clear path wins. Got reversal bar. Let me get below it. Come on, $200. What do you guys think? Did it fit the rules? The mid-band's a termination, so it's a termination that reversed the market, that gave odds favorable, that has a clear path, that pulled back to support inside of favorable large triggers. It already gave me a reversal bar, so my risk is reduced. Had I taken the correct trade, I'd still be up money at this point, but because I got in late and a little impulsive, oh man, I got more than $200. I got plenty of room to get to that fib and get paid, right? There's my second target at $200, but isn't that on the wrong side of everything? So from 32.25, I had quite a bit to get up there. Let's see if this one decides to finish the move. Hey, Cav, have a good one, man. And then, guys, can you do this instead of taking 200 on the second? Can we just put a couple right at the fib and say, you know what? When price reaches that, it's going to be a termination condition. If price reaches it. How about if I just put all of my targets right there, see if I can get paid, and if I can, cool, and if I can't, whatever. It's odds favorable, it's a clear path, it was a pullback, everything says up. There's no reason for me to mess with anything. Let's see if we can get up there. Go S&P. Go S&P. Guys, do the up dance for me. Oh, it's so close. Oh my gosh. So close. Maybe I should jump ship. Maybe I should get out of this trade. Maybe I should... Oh, I'm so nervous. Oh, maybe I should... Oh, no, it hit me. That's funny. I put it at 2.25 and not 200. And it hit me and didn't fill me. Here, let's put it back at 200. And let's see if it'll get us. Is it okay to just hit close because it hit me and didn't fill? Can I go break even because it hit me and didn't fill? And watch this. It's going to come back. Remember we said these are areas? I'm going to laugh if it comes back. We'll go break even. It hit my target, guys. Hit it twice and didn't fill it. You have to make a decision there. Do you stay in the trade or do you exit? That's one tick off of resistance. We'll see if all that momentum gives them another shot before they take us out break even. But guys, that's funny. I'm not in control of it. I'm going to laugh my ass off if it stops us out. Oh man, they're making you sweat, aren't they? You're staying in, Steve? Are you saying momentum creates an advantage? Oh, there we go. And look at that, guys. We just undid our mistake. Momentum for the win. How tempted are you to jump ship on these? How tempted are you to change your strategy because of fluctuations on the small chart? Even though, like Steve said, look at those large triggers. So guys, we undid our opinion and we're back to 430 as a classroom. We only broke rules once as a class, guys, and that was it right there, and that was our only loser. No, that wasn't a 50-50 at all. Josh, that was as clear as it could be, brother. That was odds favorable, didn't reach the area. Now it's 50-50. But do you guys remember when we hit the mid-band? We said that the expectation on the pattern was to close the gap. And if they closed the gap and kept going up to get to the fib, do you guys remember that? Weak triggers, mid-band, close the gap, finish the move to the fib. If you don't think that they know where these fibs are, you're kidding yourself. And now you know where they are. And now I've got divergence from a fib at their target. Guys, the buyers may be done. They may break, but doesn't it make sense to get paid? If you knew they were going here, doesn't it make sense to get paid there and then wait for it to break? And guys, this is what we do. So Jazz, welcome. Don, who else is in here that's still relatively new? Welcome to Nexgen. We do this every day. And because you guys didn't participate as hard as you usually do, we had time to do some live trading. But in 50 minutes, we're up $430, and we only took one loser, and it was an intentional breaking of the rules. An intentional breaking of the rules. And it kicked our asses, didn't it? But even with a mistake, we're up $430. Guys, I can't make this up. We just did it live. That's okay. I don't have an entry on the 13.2, Josh. My entry's on the 5.1, and it was actually late. When the reversal bar printed, my window of opportunity was right there. But because we were scrolling through stuff, I came back and said, oh man, that is an entry. There's the box right there. Odds favorable. Didn't even give a tail. No, not a 50-50 at all. Yeah, we're right there. We're still clear path. So let's do this, and this is how we're going to end class today, guys. I'm going to pull up my calculator. We'll take out for commissions. What if the best I could do is follow my rules, and make $400 a day? There's 5 days in a week, right? That's not a bad week. Whoops. So that was 2,000. Let's do this. Let's just go full math. Let's go 400 because I know that there's 252 trading days in a year. It's $100,000. I'll try to, Steve. Cindy, these classes love you back. But did you guys, and this is what I really want you guys to notice, we broke rules one time, and that was our loss. None of the trades were aggressive. None of the trades were outside of the trading plan. Even the management was so conservative that didn't rely on any chart reads. And we still made $430 in this last hour together. You don't need more, ladies and gentlemen. You don't need all the trades. You don't need every move. We followed the KISS plan. Learn the KISS plan. Make it easy on yourself. TLC, are you typing up that question? You guys want to know the truth? When I started trading, I would go short right here, and then I would go short again right here. And my brother would be teaching class. He's like, all right, all you guys in your long position, we're looking for fibs. Because I wasn't a chart reader yet. And I used to think he had an 8-ball, like a magic 8-ball. Something. And it was frustrating because I would take the short because I hadn't done the study. And everybody that was a year ahead of me was taking the long. And that's pretty cool. And guys, that's it for me today. TLC, we'll stick around for your question. And then, yeah, hey, Dave, let me just drop it in the room for you. There you go. There's mine right there. That's a math problem, TLC. You're asking me to do algebra. Yeah, Steve can help you with that. I have no idea. When you put words and numbers together, TLC, my brain hemorrhaged. I can't do it. I don't know what the 30% rule is. Hold it, maybe I do. Are you talking about you can't have the windfall, right? One day can't be 30% of your profits. That's it. So do this. Don't give me all the in-between numbers, TLC. If you have $2,500, what is that? 6. You can't have one day with a $750. No. One day can't be more than 30%. That's it. One day's profits can't be more than 30% of your total. That's it. Don't overthink it. Don't care about your losses. If you go to take a payout and your profits are $3,000, you can't have a $900 day in there. Because that's 30% of your total profits in one day, which is a windfall, which isn't consistent trading. It's going outside of your norm and creating luck. And luck isn't what they're looking for. They're looking for people that can be consistent every day. Does that make sense? I think so. That's my understanding, but my understanding could be wrong. I told you I would try, right? And I don't know if that's the correct answer. I would recommend getting with Apex, or just don't be a windfall trader. But if you go to it, it says 30% of your profits can't happen in one day for the period. That seems pretty clear. It doesn't say anything about your losses. It doesn't say anything about your trailing drawdown. It just says 30% of your total profits can't come from one day. And they call it the windfall. The same reason if you trade during news and make 10 grand, they're not going to pay it to you because you're getting lucky and they don't reward luck. I hope that makes sense. But of course, double check me, guys. I don't work for Apex. Always double check me and just make sure. And that's it for the